Well, hello and welcome to the 27 Degree with Chris and Nancy. So today we're going to do something a little different. Usually we have medical topics that we talk about. We're going to talk a little bit today about your financial health, I guess. So it's still about health, but a different aspect of health. And with us today, we have Senior Loan Officer from Baycoast Bank, Mike Taveira. Before we start our conversation, I'd like to thank our sponsor, Baycoast Bank. Baycoast Bank is just right for all of your financial needs. Visit baycoast.bank or call 508-678-7641 to learn more. So, Mike, maybe you can start by just telling us a little bit about yourself, and we'll go from there.
Yeah, absolutely. I'm honored to be here. I'm glad to join the podcast. I've been in the mortgage industry for 15 years as a lending loan officer. I've seen multiple situations, helped many families, probably close to 2,000 families achieve their goal of getting a mortgage and getting that goal. I actually live in Somerset, reside in Somerset. I have family, everything there, locally, roots all around here. So everywhere Baycoast Bank touches, I know exactly where these areas are, and I'm very familiar with the purchase process in this southeastern New England. So I think that's a big key, as we'll get into later, as far as when you have a lender that's maybe throughout the United States, they're not touching our local area and don't know the ins and outs of our process.
So there's definitely a benefit from using a local bank, it seems.
I would definitely agree with that, because I worked on the other side for 10 years as a mortgage lender. This was about 6 years ago, and we lent in 46 states. So there was times where I was talking to people that I was never going to meet, and they were a loan number to that company. So dealing with people locally, I mean, we still lend all the way to Florida, but 95% of my business is locally, Somerset, Dartmouth, Fall River, New Bedford, all the surrounding communities. We have about 30 branches from the Cape to Connecticut up to Foxborough. We're an ever-growing bank, but we take a lot of pride in the community outreach.
And I want to talk too a little bit about your website. So when I was doing research for this podcast and to talk about mortgages, which I am so excited to do with you, thank you for being here. The website's awesome. I had gone on baycoastbank.com website, and when you click under mortgages and click under insights, guys, you have to look at this website. They have things like what exactly is my mortgage loan, new mortgage down payment assistance programs, know your mortgage payments, 5 key steps to buying your first home. I mean, it goes on and on and on. It's great information on your website. So please hook into that.
Absolutely. And I think the key to our website is it tailors kind of to the buyer that wants to gain education, and their reluctancy to reach out to somebody because they don't know what's going on, or they're embarrassed of wherever their situation is right now. You can get simple answers to very elementary questions, and that will build their knowledge up to have the confidence to have a conversation with the loan officer, and we can educate you. We want to get as much education out there as possible without using mortgage lingo. So on our website, we've kind of made it a very simplified, here's the questions that you probably would ask, and the very simple answers without getting into abbreviations and underwriter talk, which it just goes over everybody's head. So specializing in first-time home buying and educating for free, really locally. We have so many events and clinics to even go down into high schools and educate them, because that's really not what we did. I mean, when I was growing up, there was none of that in my high school, which is kind of baffling. They don't teach you taxes or mortgages or anything like that. So it's kind of on us as a local bank to give that education in high school, and then they're confident about it.
Right.
Yep.
Now, that's a great point. I mean, I never really thought about that, but you're right. We don't get any education in our schooling.
Yeah.
You know, it becomes such an important part of our lives.
Yeah, I mean, it's probably one of the biggest goals you'd put on your board as a college or young adult. You say, all right, well, if it's going to be buying a house or investing, or you really didn't learn any of that in math or any economics class in well, at least I didn't. Maybe the curriculum's changed a little bit, but they never got into any of that. And honestly, I think that and the tax side of things, I get more tax questions during the day about buying an investment property. Can I sell? Am I going to be tax liable for getting rid of it so fast? And even if it's simple answers and a tax accountant can give it to you, not everybody has that resource where they can talk to a tax accountant and say, here's my situation, can you give me the answer? Right. And I think if we were taught that early, we would be more apt as a younger adult to invest in certain things.
Right,
Yep.
right. Right.
So someone thinking about buying a house, like how do they do that? What's the process?
Yeah,
what are the first steps?
That's a great question.
So the great part about today is half of my job. It used to be more processing and underwriting and involved in that side of things. And it really bogs you down when you can be out there educating to people, especially with mortgage environment, as I'd like to call it right now, because we're kind of in a tumultuous time. But I probably once or twice every quarter, I do local events, whether it be at a restaurant or a bar or some local anywhere in the city, to have like 15 or 20 home buying first-time home buyers, or even just buyers in the market in general. And it's more educational that I'm giving it, but I make it fun, where I actually make it almost like a Jeopardy game, and it keeps track of your points. Because when people are engaged on their phone, because they don't want to sit and gain information and then I don't want to bore them. So if I make it educational and a game, and they win prizes and stuff, but they're gaining information while I can talk on mortgage points, an attorney can talk on what title and deed prep is. I have the insurance company at Partners talking about their side of things in insurance. You get the education and you're kind of engaged because they download the app and it keeps the score, and we have a winner at the end in the room. So
do they get a free house or?
Oh, I mean, I wish. I'll have to talk to the bank about that. I'll have to talk.
That might be a little bit too.
That's our next program.
Exactly. I mean, if we get enough buyers, well, you never know. I'll pitch the idea and see what happens.
But it does speak to the fact that, I mean, what's interesting about Baycoast, I think, is you're so interested in teaching and financial literacy and just education in general, which I think is really a remarkable thing for a bank to do.
Yeah, because when I go into these schools or whatever the environment may be, especially in Fall River, there's so many questions from people that they're curious about it because they really don't get it in the school. So they feel like I have this hour to like gain some knowledge. And like normally I would, like when I first went into it and I was doing these things, I was like, I'm not going to get any questions. Everybody will be quiet and timid and they won't want to do it. It's the opposite. Sometimes I'll stay there for another hour and a half answering questions because they know they can call me anytime, but they're reluctant to call because they think, all right, let's get into an application. So that kind of feeds back into the process where just because we're talking as a loan officer, I mean, I'd love to get you pre-approved, but I like to have a good hour and a half conversation, whether we meet in person or it may be we talk over the phone if they don't prefer, depending on the time. I mean, we're 24/7, so my job doesn't end at 5. Banker's hours doesn't exist anymore. So It's like there'll be 8, 9 o'clock. I'm taking phone calls and text messages because not only do I want to be available to realtors and these buyers that are putting in offers in the most competitive market we've pretty much seen in the last 15 years, they need to be educated on what they're doing and what they're signing as far as offer sheets, because these are binding contracts. So I want them to have the answers in real time while they're being rushed by certain people to get it in certain deadlines. So I like to have that before we're even pre-approved, having that hour-long conversation saying, I want to cover every base with you. Here's where your finances are. You're in a great position. Or we have to work on credit, which I do for free. I go over getting your credit score better, and we have a very detailed operation with that, which I'll touch on later on. But really that first step in the process is having that initial conversation, and it's no pressure at all. That's what I like to tell the people. Like, I just want to talk to you, answer all your questions and your curiosities, and then we'll go map out the steps to where you're going to be in a great spot. Because there's enough stress on somebody to find the right house. I want the lending side of it to just be, all right, that's all set. Mike's got my back on that. Now me and my realtor can go out and I'll worry about the size of the yard or the extra garage or not enough bedrooms or counter space or whatever it is. That's the stressful part. The financing, I want it to be out of question.
That's great too, because having that conversation and getting to know them, they're not just a number. You know what their goals are, you know what they want, and you know what programs they fit into. And golly gee, you guys have a lot of programs, don't
Yeah,
you?
absolutely. I mean, it's a full menu, and while it's our job to kind of pick the right one for each buyer, because everybody's situation is different, it really comes down to we just have all the tools in the toolbox. So that was the main move from when I was at a mortgage lender to coming to Baycoast Bank. They're in the community. No loan is a number. So it's a client. We want to build a relationship. We want to have them invest with us, give deposits with us, insurance through Partners Insurance. So we're a full-fledged operation where we want to be in the community and invest in these people because that's who investing their money in us as far as deposits or retirement. We own Plymouth Investment, so that's our a branch of retirement. So building that relationship is key. And the comfortability after that initial hour-long conversation, it's night and day. Because if it's somebody, like if a realtor gave you my name and you never met me, I'm just a name on a paper. Like this guy could be in the industry for 2 years or 15 years. Nobody knows. So when we have that conversation and it's more of a feeling than just like, oh my God, this guy sees my finances. Do I qualify or not? That's the
Right,
last
so
thing we're going to touch on.
You have to trust them.
Yeah, it's all about
There's a lot of trust involved in this.
Yep.
I've been through it a couple times.
Yeah, I'm sure. Yeah.
There's a lot of trust involved because it's a lot of money, and it can, it can really impact your future positively or negatively, depending on how it goes.
Absolutely, and it's something where having that process and keeping everybody informed throughout the whole thing is key to me, because if you think about it, I mean, you just said that you're not just going to buy that one. Very rarely you're going to buy that one house and you're going to be in it till the rest of your life. So it comes down to that transaction went great. And then they refer you because they're like, I work with Mike. I had no problems. It was a great process. And then when they're looking to downsize or upgrade or move to a different state, they're like, Mike, I don't know if you do this, but I'm going to Florida. It's too cold up here. And I'm like, all right, we can lend in Florida. Let's do it as a second home or investment property, or you're moving down there, be a snowbird, whatever it is. We have all the programs for that.
Okay. So I was just
they're very curious.
We do
I like
this
it.
a lot.
I like the question.
I wanted to just take a step back and then maybe just start at the beginning when someone calls you or walks into the bank.
Yep.
And some of the process, like you've talked about a bit of it, the beginning at least, but maybe you can just delve into that a little more. Because I'm sure there are lots of our viewers and listeners who may not have had a mortgage before. They may not really understand the nitty gritty of what goes on.
Yeah, absolutely. And touching on that, it's really the most important part. That first initially meeting somebody and then talking about it and then collecting the documents and doing the application is by far the most important part. It's really the discovery in it all. So we're having a conversation. I like to meet face to face. I'm kind of old school with that. Building the rapport. You're not just a voice behind the phone where if somebody, because nowadays you're getting called by 3 or 4 lenders just by applying for a mortgage. So building that rapport is crucial in the fact that someone's going to call you right after me. And what's my voice different from their voice is if their rate's better and you really if you don't know me or never met me, there's really no loyalty there. So I think building that and giving the confidence in me and the bank, I think that's so crucial in it all. So when we have that initial conversation, I usually like to go over with what's your goal and why have you been reluctant, if you have been, to apply, and have you talked to a realtor? Because a lot of the times people have wanted to do this for 2, 3, 4 years, and they've always heard the market's not the right time, or the interest rate's not the right time, or you need more savings, or this much down, and
your credit's not that good.
And it's all hearsay where they pick up one. They may forget the rest of the conversation, but they picked up one fact that may not necessarily be true. And then now they're renting for another year and locked into a lease because they heard one thing from somebody who's not financially savvy, but maybe is in real estate. You know what I mean? So there's a lot of misinformation out there. So I kind of want to go over all that right away and be like, you really only need this credit score, and we have first-time homebuyer money for you as a grant that you may qualify for. So that savings might not be as crucial as possible. Maybe you can keep it in the bank so that when you move in, you can get furniture and all the stuff that you need to do. Because some people are like, all right, I have 12 grand saved, but when I get in there, I'm gonna have to spend all this money. So I'm not ready yet. I think I need 20. And then we're like, we have people coming to closing with $2,000 or whatever it is, and at first, last, and security is triple that now in Fall River.
Right.
So it's like,
Right.
so you're like, you could buy, especially with a good credit score, you could buy and not pay 100% interest in rent, basically. So I think going over all that, they're sitting in a seat across from me and they're saying, wow, I really should have done this a while ago, but I'm glad I'm here now. That's the feeling I'm going for. So we'll do the application usually in person, or I can send them a link. It takes 15 minutes. They fill it out. We go back over it together, which is me just checking on and making sure I understand their income, how they're paid, who their employer is, stuff like that, just to make sure we don't get too far into the process and they're like, well, I started my own business now.
Yeah.
Those are my pay stubs from 2 months ago. But so I want to uncover all landmines right away so that I can give the realtor the confidence that they're not wasting their time with a buyer that's not qualified, and we're all on the same page and we can work towards that goal. So once that application happens, it's really very simple income documentation that I gather from it. It's pay stubs, a couple of W-2s, couple of bank statements just to show where your money's saved. And in certain cases, if you're self-employed or have houses or whatever, we'll get a tax return. But it's really not much that you don't have on hand or can't get within 10, 15 minutes. And I do all the legwork. So it's really just, I'll meet with you, I'll grab the documents, or you could email them to me, bring them into the branch. I will meet as many times as you're comfortable with in person, just so that we can stay in touch. And what I like to do for my buyers, which I think is rare, but now is probably most of my day, is I have pre-approved buyers that, whether it be 15 or 20 of them right now, I say, call me, shoot me a text message with the address of where you're interested in. Like, I'm going to see a house this weekend. It's this. Can you tell me the payment? Because to me, when I looked for a home, I wanted to walk through that house and be like, this payment, I'm going to be sitting in this living room. Yeah. And the payment that Mike gave me is going to be very close. Does that feel good to me? Like, I'm going to pay this per month on my mortgage to be here. Because like sometimes, I mean, in this market, there's no inventory. So you're making some compromises. And with rates obviously being a little bit higher, you may be like, this payment isn't worth the compromise that I'm going to have. And that's something that I would want. So I do it for everybody. It doesn't take me long. I can shoot you a text back in like 2 or 3 minutes doing the math on everything. As long as I have the address and what you want to offer, I can pretty much give you within $50 of what that payment will be. Wow. So I think that's a service to my buyers where I love it because we stay in touch. So I don't lose them for 3 or 4 weeks where they're just, hey, are you still in the market? Did your realtor say there's nothing out there? Or are you every weekend? Are you out there rallying and like fighting off people at these open houses? You know what I mean? Because it's gotten back to where it was 4 months ago where people were fighting it.
So it is back to that level of, I guess,
intensity.
The stories are real. 30, 40, 50 grand over asking is back. And you have, like, when COVID was crazy and you had people lined up down the street and they could only go in one at a time. Now they can all go in at the same time. Oh my God. There's still all the cars down the street. So, I mean, it comes down to it's a competitive market, and the inventory being so low is what's driving that.
I hear all these stories about people listing their house and it sells the first day for, you know, and there's bidding wars and that occur. But despite that, I'm sure there are people out there who buy homes and their monthly payment ends up being equal or less than what they would pay for rent.
Yes. So you hit the nail on the head. You got it. So you have all these people that normally in this market would downsize. So you'd have more inventory where they're like, I'm going to downsize, I'm going to sell, I'm going to buy this house at $250 instead of buying it. My house is worth $500 because the values have gone up so much. We'll take the equity. We'll get a small mortgage on the second. And then they realize, wait, the rate is this now, so my payment is only $100 less, and my mortgage is $150,000 less or $200,000 less. So it doesn't make sense for me to move out of my house to downgrade when my payment's the same. Unless your utilities are crazy and it's just you in the house, it doesn't make sense. But I almost want to stay away from that, because you can downgrade if you see the downsize, if you see the right opportunity, because the refi opportunity will be there to get that payment back in check. So if you see a property that's the perfect downsize opportunity, I would still be in the market, at least maybe if you're not seeing it every week, but be sent listings, keep on the market, because it's really the house, because you can refi out of the rates when they come back to earth and inflation is curbed, hopefully in the next 2 to 3 years. But when it does come back to earth, it's an easy refi process for us.
So what then are the basics to qualify for a mortgage?
Yeah, absolutely. What I like to kind of break it down without overloading a buyer with too much information there is it comes down to credit, income, and then really what your plan is, what you're trying to buy. So we have just to give you an example, we have a lot of buyers. They're like, I want to buy my single family, and I don't want to start with a 3-family. I want to go straight to the single family. So there's no like rental income included or something to offset the mortgage payment. You have buyers that they're told, or it's a great investment opportunity to start with the 3-family, live in it, have the other renters pay your mortgage payment for you, and then move on to the single family later and use that as your retirement plan when that house will be paid off and you can take the rents there. So it'll all come down to the plan, but basically credit and income are huge. So I'm seeing now more buyers coming back into the market because they're realizing that their credit score, while they were told that at some point wasn't great, or they use these apps like Credit Karma or on their Discover statement, what their credit score is, it's really not a deterrent right now in the market, because I use this tool almost on a daily basis where I can work on your credit score, give you a full roadmap of how to get your credit score up in 2-3 weeks, and maybe it'll take a little longer in certain cases depending on what's on the credit report. But I just told her that I had a client about 3 weeks ago, and we got their credit score up 70 points in about 2.5 weeks. So this doesn't cost you anything. It's a program that the bank has through a credit agency, and it tells you you can pay the balance from this to this. You address this one account with this, and your score will jump from this to this. And it's pretty accurate. So giving you that roadmap while you're looking for a house, it's priceless, because while you may qualify now and we work on the score while you're out there looking for a home, maybe you went from 630 to 700. Now your rate's going to be better. Your PMI may be lower. It might open you up to grant money or endless possibilities, because the credit score could be priceless for you. So that's what I like to do on the other side of things, because if people think they're not ready because of credit, they usually deterred right away, and then they don't revisit it for like a couple years. So if they're embarrassed of that score, they already got embarrassed once, they almost enter the conversation like, nope, I've already been told, I know what it is, it's not going to happen. And if we can work on it 2 weeks and you've been renting for 2 years because of that last statement, I think is enough time to invest. And if you don't have a roadmap, you're just aimlessly working on stuff on your credit report. You don't know what the credit bureaus know.
I think that's so important. Like, even if like you may be 6 months or a year away, at least you have those goals to hit. Like, you can do this and this and this on your credit. You can do this maybe with your savings, or you can work on this. You know, it's like, great. Now I know what I have to do and I can gear towards it.
And those honestly are my most thankful clients, and they're the most loyal because I took the time to put in the extra effort to get them to qualify. And those are the ones that don't look for the lowest rate in the market. And when they find a house, they're like, oh, well, this bank has a promotion or whatever it is. They're like, Mike, you got me to this point. You're my guy. We normally have the lowest market rate. I don't want to ever say that, but they're always like, you got me here. I would never be here. Now I can get an accepted offer when I thought I was going to be renting for years.
So it's almost like a personal trainer for finance.
That's a
because
great way to look
you
at it.
don't go there when you're all buff. You're just like, you go in there when you need a little help to get where you want to go.
We are talking about financial health. So that
I know,
makes sense, right? Yeah. So,
Worked right
let me just take another step back. So someone, let's say they just, they're in college and they're, most of us in college weren't thinking about this, but someone's in college and they say, I really want to start thinking about my credit. It's never too early to do that.
Absolutely.
So, and maybe they're going to buy a house, a few years down the road, right? Then when they get a job and they get established in that. When is it too early to think about this stuff? Is it too early at that point to start thinking about it, or should they start thinking about this stuff at that point?
I think it's crucial that you are educated at least a little bit even before or during college, because it should have an impact on how you take out your student loans.
Right.
Because I know everybody wants to take out student loans. Obviously, they have to in most cases, and they don't know how that it's going to impact them when they go for the mortgage. So explaining how the student loan process works and then how it impacts the mortgage pre-qualification, that education is something I wish I had coming out of high school, because I attacked my student loans viciously with money that I saved because I wanted that goal to buy the house very soon. So when it comes down to it, a lot of those loans, student loans, are deferred till 6 months after graduation. And there's something hanging there now where it's forgivable. It's not forgivable. Most people aren't even educated on the loans they already have out as student loans.
Right,
so
right.
Whether it's federal or private student loans, the like pipe dream that it may be forgiven at some point or a portion of it, there really needs to be education on that, because at Baycoast, we actually have a program where as a doctor, your student loans normally are a big number.
Right.
And we have programs specifically designed for doctors and medical physicians and lawyers, anybody that takes out like probably 7 years of student loans. We have programs that right out of college, you could still qualify with large student loan down payments. We basically anticipate your earning potential of a salary when it's coming, even though you may not have the history coming out of college, and your student loans may be $1,000, $3,000, $4,000 a month coming at you quick. We know the earning potential and the stability of your job and employment now, and we could still get you these specific products at great rates, ignoring certain student loan debt payments.
Okay.
So you still qualify for the home you want, even though you may only be on the job a couple months.
That's interesting. So you're looking at potential for earning, which
Yep.
is, I never knew that was actually looked at. That's fascinating.
Yeah, it's when we rolled it out, it is something that comes up not as often as most other programs, but as soon as I hear their profession, I start to talk about it, because most people didn't know about it and they're not educated on it when they take out their student loan. So when it comes down to it, most of those conversations go, I'm gonna be earning this, and I'm gonna be fine because I haven't had any other bills, just these student loans that are gonna hit right now. And then that's when I'm like, it's great news, because we're gonna go off of, we know your salary is gonna be this, and then probably take off in the first, second, third, fourth, fifth year. So we can actually see. We don't want to get too crazy where we know you're still gonna have to pay the student loans, but we can have a higher debt to income ratio, and just knowing the confidence of that buyer.
I wish I had known that, because when I was in residency, I ended up buying my first house. It was a condominium.
Yeah.
And, I mean, I wasn't making a lot as a resident, of course.
Yep.
It's a point in your life where your income is very low, but none of that potential was looked at. It was very hard to get a mortgage.
Yeah, exactly.
It really was.
Yeah.
And the only reason I did it was I was going to rent, and I realized that what I would be paying for rent was more than I would pay for a mortgage on a condominium.
Exactly.
So what about on the
Especially in
other
Boston.
end of the spectrum, like on the other financial spectrum? So you have these high earners like your docs and your lawyers, but what about people that may have a bankruptcy in their past? Are they ever eligible for?
Yeah, so there's that's what I say, we have the full menu. So as soon as we uncover all the quirks of someone's profile, we can actually lend. I have a program right now that 2 of my buyers are using that it goes to down to 580. So a 580 score, while it is not the greatest, it's not going to look great on their credit report, but sometimes if you, especially a younger buyer, if they only have 2 or 3 trade lines, very like maybe $1,000 credit card, they might pay their bill all the time. And then just 2 months ago, they missed that $35 payment because they don't have a credit history, because credit is built over time, because they only have a snapshot of 2 years that they've been really using credit. That most recent late can hit them for 100 points, like because
Wow.
it's been so recent.
Right.
Like you probably is, if you had a late on a account like last month, you're not going to see a big impact, even if, because over time, let's say it was you used credit great for 15, 20 years. That small snapshot, you have such a big snapshot. It'll impact you, but it won't be as great as that person because we only have this sample size and you screwed up for this amount of time. The good part is it's easy to come off that because the more you pay, the bigger your snapshot becomes. And if you keep it on time, it'll exponentially go up back to where it was. But keeping those on-time payments when you have such a short credit history is crucial, especially coming out of college or being in high school. Sometimes there's ways to remedy that. That's why I like to have those conversations where they may have just one bill and they pay it on time. And if that happens to them, we use tactics like, all right, maybe you get put as an authorized user on like a parent's account that has a great pay history. Now that credit line shows up on your credit report, and your snapshot now looks very good.
Really?
Yeah, so that'll help you out
that
too.
can be done too. That's interesting. Huh. I was not aware of that.
Yep.
Primacare is Southeastern New England's trusted leader in medical care. With offices in Fall River and surrounding communities, we're dedicated to your well-being. Our carefully selected team of more than 150 providers offers world-class primary and specialty medical care. Primacare doctors are supported by a skilled staff trained to deliver comprehensive radiology, imaging, and testing services. Primacare is large enough to take care of all your medical needs, but small enough to care for you personally. Primacare is by your side.
So then a bankruptcy doesn't exclude you. Is there a certain waiting time?
Yep. You can do an FHA loan, which is the 580 score, as little as 2 years out from a discharge of a bankruptcy, Chapter 7, which is the one that wipes everything out. And then conventionally, which is usually when you have a little bit higher credit score, you go conventional. You can do that as little as 4 years out from it. So being 2 years out, if you think back, we were still in the pandemic 2 years ago. So you could literally have filed bankruptcy in the middle of the beginning of the pandemic, and you could buy a house now. So it's not that great of a time, just 2 years out from that discharge.
So if I'm starting out or I'm trying to rebuild my credit because I had a bankruptcy or whatever it may be, and let's say, for example, I have a credit card that I'm using to have some revolving credit and hopefully build up those numbers. Is it true that if I pay on that credit card more than once a month, it helps out with my credit?
So the key to concentrate on is not the payment more than once a month. It's the utilization of the card. So the easiest way to put it is the more responsible you look to the credit bureau and managing your credit, the higher your score will go. So managing credit available to you correctly is between 10 and 30-ish% of what you're allowed to borrow. So you want to keep that balance like if it's $1,000 limit, you want to keep that balance under 300, but probably over 100 because you're using credit responsibly. You're using what you can, not too much of it where you max it out, but you're not paying it off every month to where you're not really using credit. You know what I mean?
So you want to have some.
You want to have some balance. That's the misnomer. They're like, if they see, like someone will call me and be like, I can get that score up. I'll just pay that card off. And I'm like, well, that necessarily might not be the best option because that doesn't look like responsible because you've had it maxed out for a year. Now you're just going to pay it off. You didn't use it correctly.
We could do a whole talk. We'll probably do another podcast just on credit.
I would love to.
And building your credit because I think
that would be an excellent topic.
I think
so many
so,
people
too.
would benefit by that. Yeah.
All right, we'll get you booked for another one.
I'm in. I love to talk, so I'm in for the credit.
So what happens with the pre-qualification? How important is it to get pre-qualified?
So it's a necessity if you're really going to look at homes. Like you could look at homes online and not be pre-qualified, but if you're going to walk into someone's house, especially with realtors nowadays, they're going to want a pre-qual letter right in hand before they really bring you into anybody else's property because the seller's realtor, they want to know that people that are there are going to make an offer or have the potential to make an offer. So I didn't really plan on touching this, but there's also a difference between pre-qualification and pre-approval. So pre-qualification, you're seeing in the market now that sellers' realtors as they should, they don't put a lot of value on that. So you may have a letter that says you're pre-qualified, and it doesn't mean much to them because that pre-qualification could really be just verbally saying what you make, and they probably did a credit check, but they didn't collect your income documents. They didn't double check everything and run what's called a desktop underwriter to see if you're approved. I do that with 100% of my buyers getting pre-approved, so that when the seller realtor, it's happening more often now. Like when my buyer puts an offer into the seller's realtor will actually call me. And while I can't give a lot of information, because obviously it's your personal information, the confidence that I have in my buyer and what we've discussed is crucial. And it resonates over the phone to them. And I say that he's one of my strongest buyers. I have all of his income documents. I've ran desktop underwriter. It came up in approval. They are approved for that purchase price.
So that has to give people an edge too in a competitive housing market, the relationship that you have with all the realtors. I mean, they know when they call you, it's sound.
Yep. And I think the name of the bank, that's also like a second reason why I moved from a lender to a bank. Our bank reputation and the name Baycoast is you really, that's the most valuable thing to us. Our reputation is everything. So we will go through every length to have a deal go through, make an exception for a buyer, still lend on a property even though it may not fit in the box, as we like to call it, where it needs repairs, or if it's a right situation and the buyer's profile is not cookie cutter, but we can still lend on it and it's not super risky.
Right.
We want to do it to build that relationship with the realtor, the buyer, and get everybody to the finish line, because at the end of the day, we're all working towards the same goal. The buyer wants a home. The realtor wants to close the deal. We want to close the deal. We want to lend and earn that customer's trust. So it comes down to the realtors I've worked with, most of them, I've worked with them for over 10 years. So it's kind of like unspoken now. But when I do work with newer realtors, I make sure I'm high touch with them, because having that confidence, and they can say, oh, I already talked to the loan officer 3 times this week. That everybody in the transaction's like, okay, all right.
It just makes them feel so much better.
This will be easier.
So this whole market now is so different. Like, I'm just thinking back to when I, bought my homes in the past. Basically, you'd look around online, or even before that existed, you'd look in the paper or whatever, or magazine.
You're dating yourself.
And, you'd just show up at an open house.
Yeah.
You'd walk around. You can't even get in the door now probably without a letter of some sort, right?
Yeah, I mean, any good realtor is really trying to vet who's walking through their open house. It probably does get tough with 40 or 50 people walking through there, but you're almost like got to get a net to catch these people. But like, they're either with their realtor or got told to go there, and probably still have that letter in hand, because you really don't want somebody walking in your house that's not in the market to buy a house if they're just curious as neighbors or whatever it may be. So, I mean, having the full pre-approval is key, because you look at more attractive to the seller. That's for sure. Step 1. And step 2, I used to love those magazines, by the way. Like you go to the local pizza place, and like you open up the magazine, and you're like,
we did to kill the time before the pizza came out.
No way. And but while you're waiting for whatever you got to wait for, I wish they still had those, really. But I mean, now I guess it's just Zillow. You just go through Zillow like that. But I think that you're really not going to be inside of houses without talking to a loan officer first and having that conversation, because I kind of put it back on you. If you were not the buyer and you were the seller, would you want 50 people allowed to walk through your house for 2 hours?
way.
No. Yeah.
Of course not, yeah.
Exactly.
What are some of your more popular programs?
So right now, couldn't be more excited and kind of like preaching how much first-time homebuyer advantage there is we have grant money, where in our footprint, which to kind of describe what footprint is our banks and our branches are everywhere around here, Rhode Island, Mass, and Connecticut. So if it's in our footprint and the town is where we always do business, we have a $10,000 grant for first-time homebuyers that it matches dollar for dollar what you already have saved for money. Now, we have a lot of buyers using it as, all right, I already have 15 grand, so we'll just tack on another 10. So now they have 25. It just makes it a better loan for them and a cheaper loan for them. But I've also used it probably 3 or 4 times in the past 3 months, where the buyer had $4,500, and we matched 4,500 because it was dollar for dollar. So now they have $9,000. Now they have 3% down of a $300,000 purchase, and they can buy.
Oh, wait, back up.
Sorry.
So, like, how does this work? Like, where do I pay this money back to you? Like, where does it?
That's a great question. So, it's unlike Mass and Rhode Island housing, where they like to sometimes lend you the money at a very low interest rate as a second mortgage, and sometimes it has a payment. This is not like that. So it's what's called a silent second. So it is technically a lien on your house, but if you own the home for 5 years, it's fully forgivable. It's zero interest, and it's at the 5th year we just release the lien. So the reason we do that is because, first, we don't want it to be like a flipping situation or like somebody's trying to. We want to cater
Really
to the community and first-time homebuyers who are going to be in the house. If you happen to sell, people's situations change all the time. So I know, like, when I bought my first house, I was like, I'm going to be here forever. And then 3 years later, your situation changes and you're going to move. So it is incremental, where if you sell in year 3, 1, 2, 3 years, it goes down to $4,000 if you took 10.
Oh, that's fair.
So you sell, you take your profit, you only have to pay off the 4 instead of the 10. So you still made out with 6. There's no interest on that. From the proceeds of the sale, you pay it off. So it's truly a silent second with 0 interest. So whenever somebody is eligible for it, I say, hey, I know you weren't thinking this, but you're perfectly eligible for this, and it's basically a free $10,000. So if your plan is to keep it for 5 years, even if it's not, let's take advantage of this money, because there's no third party involved, which is the most painful part of the grant money. Is Mass Housing, Rhode Island housing don't move at a very fast pace,
right?
And they're working with a lot of banks around here, so they're processing files first in, first out. So you're in line with every bank, not just your own underwriting team. So I'm seeing those be out 60, 75, 90 days. And as you saw, where I'm sure you saw it on social media, where Mass Dreams was like $50,000 free, don't pay it back, and all these social posts about it, they were anticipating that was going to last for like a year and a half, and it lasted 72 days.
Oh, no.
So they didn't fully comprehend how much that was going to flood the market. So they've kind of fine-tuned that you're going to see Mass Dreams back again, or it's going to be a Mass Housing grant, but it's probably going to have a payment, and it's going to be back to the old ways rather than just the free money, because it needs to be some sort of checks and balances on that. But I like to use our grant more than the Mass Housing, because you don't have to make that payment, and it's basically free money. While it is you're getting a loan and it is a second lien, if your plan is to stay there, I mean, it's kind of a no-brainer. I would have used it if it was available when I bought.
And like you said, if you can just keep money in the bank, as a homeowner, you don't know what's your water heater or something else. It's nice to have.
There's always an expense you don't expect when you get in there.
Right.
That's true. That's very true.
So now, what other programs are?
So we have, I would say, like, the menu is pretty similar on one side of things, with like FHA, VA, conventional, where we service everybody, especially with veterans. I've seen recently our rates are probably lower than most companies that I've seen specializing in the VA loans, which is great because I love doing VA loans. Now, the products that nobody really knows about was the doctor or like high earner program with the student loans. That's on our menu that a lot of people don't have. The way the market has been with rates and them kind of taking a spike in the past months, you have a lot of people utilizing 5/1 ARMs because the rate is lower. So you still can get a low rate, and it's fixed for the first 5 years, and then adjustable for the 25. But in a perfect world, and the logic behind it is, when inflation is going to be curbed, they'll refinance out of the 5/1 in the first 5 years to get a lower 30-year fix, but take advantage of this being protected at 1 or 2 points lower than what the fixed rates are today, so that your payment in that first 2 years could be up to $700 or $800 lower in that ARM product. So the people who I try to educate on those programs, because for 15, 20 years, you heard the word ARM and you immediately like shut your brain off. It was like a wow, wow. So like my borrowers that were in the jumbo space with taking out bigger mortgages were always utilizing ARMs.
And just for people that may not be familiar with that lingo,
Yep.
it's the adjusted rate mortgage.
Yeah, so it's an adjustable rate mortgage. So it's fixed for the first however many years. Let's say commonly it's 5. And then it adjusts with the market once a year. Whether it go up or down, you ride what the rates are doing yearly. So the premise or the logic behind it is you use that 5 years. If the rates are expected to go down when inflation is curbed, you still grab a lower interest rate for those first 5 years, and you look to take advantage of a market with a lower 30-year fix in the future. And when you do that, we'll refinance you out of that rate and into the 30-year fix so you can have that safety, but take advantage of the much lower payment and the much lower interest rate on that product for now so that it could still be affordable. So like, for instance, if you bought for like $500,000 or $600,000 right now, your payment might be $800 or $900 cheaper, which could be a big difference. If you're from $4,000 to $3,100, in my head seems a lot. When I'm looking at a house, I'm like,
no, that makes a big difference.
So, and we are also running, I like to call it a coupon, but it's really a promotion where we realize the rate market and where things may trend. So the people that do take these programs for the ARMs or any other program that's not a 30-year fixed, in the first 24 months, if the rates do come back down and you look to refi into a 30-year fix with us, we'll do it and pay $2,500 in the closing costs. So that's normal closing costs for a refinance. It usually gets built into your loan amount, but we're going to pay those because we want you to stay with us when you refi. We don't want you to go somewhere else and refi the mortgage that we just gave you for 2 years. We want to build that relationship and keep you with us. So not only will we give you the good rate now, we'll give you the incentive to refinance with us into that safe 30-year fix and pay the closing costs so that you become a customer for the life of that mortgage.
So it seems where the rates are somewhat high right now, comparatively, not historically high, but higher than they were a few years ago. I mean, because they've been much higher than this before.
Yeah, so I say, just to add on that, like, I only know from basically 2008 on my mortgage career, so 15 years of it. This has been the highest rates I've closed in my career. So it is in a spot where it's tough right now, but we have ways around it.
But the adjustable rate mortgages are a good way to get into this for some people, I would think, because assuming that rates will eventually go down, which they probably will down the road, it may be a few years, but
kind of on a similar thread, when does it make financial sense to remortgage? Is it like a percentage point?
So a lot of people have always lived by the rule it's 1% lower than your current rate. In my career, I've had people do it every time it moves down a quarter. So it just depends on your appetite for savings. If your mortgage is on the bigger side, 3, 4, 5, even higher, the percentage it comes down would be lower because why are you going to pay $200 more a month? Even though it may only be a quarter point or at 3/8 of a point, why are you going to pay $200 more if you don't? And the closing costs are pretty similar for a $200,000 mortgage as a $600,000. So your closing costs in relation to your savings with a bigger mortgage it makes more sense to refi over a little bit of a percentage. If you have a $200,000 mortgage, sometimes it doesn't make sense, even if it's a point, to come down because if the closing costs are $2,500 or $3,000 for a refinance, that gets financed into your mortgage and makes your balance higher. And because your mortgage is so small, if you only save $80 a month, it's not going to really make a difference. So, and also you have to think about the term. You're already so far into the mortgage. Do you want to restart? Do you want to go to 20 years? So it has a lot to do with the factors of what your goals are. Is it paying it off or having the lowest payment?
So in a nutshell, I'm going to summarize what we've talked about for the last 40 minutes, maybe.
Awesome.
And then I'm going to ask you a bunch more questions.
I got a couple more too.
Okay.
I like this.
So we know that you have an amazing, here's free money, program, and that you'll.
Baycoast is going to hate that I called it free money, but I'm
That's
sure there'll
okay.
be a disclosure for that.
But you did it.
Yeah,
I did. If you qualify.
We
How's
won't
that?
call it free though. That
It's not free
I know.
money, but
Available
it's a great
money.
opportunity for first-time home.
Okay. All right. We've solved that
don't
one.
get them in trouble.
I know. I'm trying not to. I'm trying not to. And that you'll work with people's credit scores. And if you have a bankruptcy, it's not impossible to get into a house. And we touched upon some of your programs. So just briefly, so an FHA, you can qualify with a lower credit score and pretty good rates. And it's typically 30 years. Conventional, what's going on with conventional?
So this isn't in every case, but as a general rule, if your credit score is lower, let's call the cutoff like 700 or 680 in some cases, FHA might be more advantageous for you because they still give you a great interest rate with a lower credit score. The mortgage insurance monthly is set at a certain amount. So it's going to be, let's call it $150 a month on a normal or $200 a month on a normal
And this is
mortgage.
the PMI you're
Yeah, the
talking
PMI.
about. Okay.
Now, conventionally, they reward you for having a great credit score. So if you have a 740 credit score, the PMI on conventional will be much lower monthly because you're a less risky borrower. So your mortgage insurance monthly instead of $200 might be $70. So
Okay.
and also their rates are driven by credit score. So every 20 points, you can expect a different rate usually on a conventional. So like 760 and above, you're getting the best rate. 740, 720, 700. It'll slightly impact your interest rate on a conventional.
Okay.
FHAs, while it does, if you get really down to like 600 or 580, you're probably getting hurt on the interest rate a little bit. But overall, you're really receiving a good rate, probably similar to the conventional loan at like 720 with a 620 credit score FHA. So it all depends. It's not just credit score, but those are the advantages. If you have a great credit score, you want to lean towards conventional because you're getting rewarded for being a great borrower.
Nice.
Mhm.
So then when someone goes into you, I think that's why the discussion's so important,
Yeah.
because you guys just have a flood of all these programs and you know how to put everything together that it all makes sense.
Yep.
And
Well,
and
that's what I
boom.
say. I'm like, when we're having the conversation, you have some people just vehemently writing like stuff down, like what that I'm saying. But I'm like, I'm gonna do the legwork on all of that. Don't worry about taking notes and understanding every nuance to every mortgage. Once we figure out your profile, your credit's pulled, I know your income, I'm going to put you into the right box. And if two are close, I'm going to say, here's the advantage of this program as opposed to this one. So we can align your goals and how long you're going to be in the house with the right mortgage program. So don't be overwhelmed with 3 or 4 different loan programs when you apply. We're going to talk about them together. I'm going to say, by far, there's usually always one that is going to be best for you. So by far, I'll explain the advantages to that one and why it's better than the others. It gives the peace of mind to everybody that they got guided in the right direction.
Okay. So I have a question. We've talked a lot about what opportunities there are out there and maybe some of the things that people can do to build their credit or improve their chances. But what are some of the things, the common mistakes that people make that affect their chances to get a loan approval?
Yeah, absolutely. I mean, the biggest thing is when you're susceptible to those when you're checking out at some store and they're like, well, you can get 20% off this
Yes.
purchase if you just open a card with us. And then they put some purchase on a card. Now they have new debt. They have a new payment. And even though the balance is sometimes big, if it's like a furniture store or something, sometimes it's little. And they have a recurring payment. If they probably got their credit pulled, so that'll affect their credit score also. So while it seems innocent and you want to save the money, don't always take the free discount on it, especially if you know in the near future you're going to be doing something like that. So I try to tell people you can take new debt, you can acquire a balance on an existing credit card. So like people will call me that are in process and they'll say, oh, I really got to buy the lawnmower because I know we're closing next week or whatever, and I just didn't want to make the purchase because I didn't want to see the balance on my credit card.
Yeah.
I was like, as long as it's the card you already have, we're not going to recheck your balances. So the payment's already factored into your debt ratio. So taking out new debt is definitely the biggest thing. I mean, I can tell you some funny stories where people just were kind of oblivious to that, and they showed up, they just bought a new car or whatever, like in process. And I've said, you don't qualify anymore. And they're like, you have to talk to them. They got to take the car back.
Yeah.
Take the car back for 2 weeks, but take the car back.
I've never even thought about those issues. That's
Crazy,
really fascinating.
yeah. Especially when it's on the line. So it's like debt ratio is 43 and you're allowed 45. Now they have a $400 car payment and they don't qualify. Luckily, in that case, they were able to return the car because it was only 3 days. But it's stuff like that like,
sorry, honey, the minivan's not here.
you get thrown curveballs like every day. You just don't, you don't want to, like, because they didn't know, they didn't do it on
Right,
purpose.
right.
So my initial reaction is like, what? But like,
it speaks to the point. You really need someone to walk you through the process.
Yeah.
I mean, this is complicated and it's not as simple as many may think.
yeah, exactly. And the only other point I would touch on is when you're having a conversation with your loan officer, the money that you're going to use for the down payment or whatever it may be, the deposit, we as a loan officer are on your team. Think of us as on the same team, and the bank's on our team. So I have people like not wanting to talk about where money came from. Like, oh, that's coming from my friend or whatever it is, because they heard stories about it needs to come from
Right.
here or be in a bank account. So I want you to tell me the whole story, and then we can figure out how to make it right. So it's not, there's always a way to do it. So like if it comes down to, like, I've had clients in the past, like there's like a $20,000 deposit in their account, and then they're like, well, that was cash, I just put it in there. And like that could be true, but now we have a problem because we got to source that money. So when it comes down to, if we had that conversation and he ended up telling me it was a gift from a relative,
Right.
that's a totally acceptable situation. So we would just get a gift letter to the relative, gives you the gift, we document it correctly, done. Now we've made it complicated because it's in the bank account. Now we got to take it out of the bank account, give it as a gift back in the bank. So it just makes it look like
It
convoluted.
just seems like you make it so easy. You know, it's just
That's
like,
the goal, to try
here
to.
you go. Here's where I am. Here's what I'm thinking. You handle it.
I
There
mean,
you
it's
go.
it's good because I like to like really reiterate, like, we're teammates. We want to get to the same goal. We want you to be in that house. So don't leave me in the dark about anything, and I'll tell you how we're gonna make it simple.
I have another question. You know, so this can be confusing to someone, again, when they're first starting out and just kind of like, I want to check mortgages, like rates, and I want to compare programs. Are there any downfalls? Like, is there something that when people are comparing certain programs from different banks that they need to be aware of, like hidden fees or something like that?
Yeah, the biggest thing we run into is us as a bank, where we lend our own funds and we service the loan. So we want to keep you as a customer. We want you to bank with us. The statement's going to say Baycoast Bank on it. So when it comes to that, we want to build the relationship and get the deposits. Now, a mortgage lender, they really, a lot of the times when they're a broker, they're only keeping that loan from 1 to 3 months and selling it to an investor.
Okay.
So you're going to change hands right after a lot of the times, and then they're not going to, they really have no stake in the game. So
Right.
one thing they have to do in the beginning is beat our rate on paper, side by side. So that's the only, I mean, because who you would normally use your local bank that you trust if the rate's the same. So we usually have lower rates, but what they can do to make it look the same when you're uneducated is they can put points on your loan, which is a fee to buy down the interest rate. So you're basically giving them money up front to make the interest lower over the life of loan. It's not a small amount. A point is 1% of the loan amount. So if you're buying a $400,000 house, the loan is $360 or $380. It's $3,800 to buy that lower rate. We normally, in most situations, we give you the best rate with no points because that's what usually people want, especially if you're looking to refinance out of it. There's no reason to pay points when you've done it for nothing. You're going to have a new mortage in 2 years when you refinance.
Yeah, I always found the point thing kind of
Yeah,
odd.
confusing.
It's used in certain situations as like, if it's close, the best way to explain it is if the rate is 6 and you can get to 5.875 with a fraction of a point, which is like, it's very close. Like if we had a couple of good days in the market, the rate might move to that because it's so close.
Yeah.
you may not have to pay a full point to come down that eighth. That's when it's worth it, I think. It's like if it's like a quarter of a point. So it's like instead of 38, it's $1,200 or whatever it may be. It's a small fee, but if your plan is to stay in that loan for 5 or 6 years, you'll recoup that money very quickly.
So many factors that go into thinking that out, though. It's like, are you going to stay in the house for 3 years versus 15 years versus, whatever you're going to do?
So it seems like it's a lot to think about. I break it down for my client. As soon as we're going to talk about locking the rate, I always say the word break-even point. So I'm like, here's the rate with no points. It's a great rate today. And in my opinion, the only real option that makes any sense, if you wanted to pay points to buy it down, is a half a point for this rate. Now, if we divide the savings, like the payment, by how many months it's going to take for what you're paying for the point, whether it be 30 months, are you going to stay in this mortgage to that third year? Then do it. Because once you pass that 30th month, it's the right decision. So I give them the break-even point. And if their plan is to stay in the house after that, then it's a decision worth making.
Okay, makes sense.
At one point do you lock into the rate? And like, how long is that like locked in rate good for if the housing market's so competitive?
So normally, in almost all cases, you need an accepted offer or a purchase and sale agreement to lock in that rate. So while you get pre-approved, any bank would love to lock you in at a rate, but some people in such a hard market, I have buyers that find a house in 2 weeks, and I have buyers that unfortunately have been looking for 2 years. So the market was very different 2 years ago. So the bank can't lock in hundreds of thousands of dollars at 3%. So when we do it, you have to have some sort of accepted offer or purchase and sale. Then we lock the rate. We want to do it right away, protect it. We can lock for 60, 90, 120, depending on we basically cater it to that transaction. So the realtor tells me we want to close in 30 days. I lock it for 60 to be safe, and we're good. So we just do it for more than the contract is going to be for, so that everybody has peace of mind, hopefully with a little bit of a buffer, so that if the seller drags their feet or something takes a little longer on their end and they need to extend it a week or two, it's not going to be a problem.
Okay.
So you said something else that I was a little curious about. I can talk to you all night. I know we have to end soon.
No, that's totally fine.
But so how does the bank handle, like you had said earlier, the houses are selling for like 30 grand over asking or 40 grand over asking. Well, what's the house worth, and how do you balance that when you're lending?
So that is the biggest struggle between being the realtor and being the loan officer.
Right.
Because we're going to have the buyers back on, is this financially like even doable? Because it's great to win against 20 offers and be the highest bidder, but the house has to appraise for what you're going to purchase the home for. Now, luckily, right now, we don't see too many appraisals coming in short because the market is inflated. So you can justify higher values because a lot of other properties are selling over asking in every town. So when it comes down to it, we're not seeing where it did get out of control in the middle of COVID, where the bidding war was so outrageous, 80 to 100 grand over, that the appraisals weren't coming in. You could still, if you were putting more than the minimum down payment down, you could still buy the house, but it's glaring on paper when it appraises for 440 and you offered 500. You're like, wow, it's a 60 grand. It's just hopefully the market goes up, and and the 60 grand is basically a bet on the market going up. Right. So when it comes down to it, you want to have a realistic offer. I know you want to win it, but it still has to be a realistic because the appraiser is going to go out in that first week when you have your accepted offer. He's going to take a walk through the house. He's going to give you 5 or 6 similar homes that have sold in the past 6 months, and then he's going to give you the value of your house right now if it's sold. So as long as it's in line with other properties have sold, that's great. Your offer, even though it was over asking, it just probably means the realtor that put it on the market put it down a little bit lower so that she could gain interest in a certain price range. So while those deals still do go through over asking, the touchy subject is is it going to appraise for that? Because in the height of it, people were using unsafe means to gain offer. They said no appraisal contingency. So that means no matter what the house appraises for, I'm still going to buy it. So if appraisals came in low and you wrote in on the contract, no appraisal contingency, and the purchase price is 450, it appraised for 400. You've already agreed, no matter the appraisal gap up to a certain amount, we're still going to buy it, even though we know it's not there. That's where it gets dangerous because you really have no control of what the appraisal comes in at. And I just had so many people waiving home inspections and not uncovering problems in their first home, and also bidding over asking and waiving that appraisal contingency, which is really their two safety nets to make sure that they're making a right decision in a 30-day. You might have been looking for 2 years. Now it's fast tracked to like a 2-week period. Like, am I making the right decision?
Right.
So those are the people that I try to have very lengthy conversations about before they put in their offer, when they start to talk about appraisal contingencies and waiving inspections. I'm hoping that I work with a lot of good realtors, so they are having those combos. I'm almost positive they are when they're writing that stuff down. But you really want to reiterate how the risk in it, not just like, this is how we're going to get our offer won. No. So if worst case scenario happens, here's what's the scenario. And this is going to be next week that this is going to be looking at you. It's not going to be like down the road. This is what's happening. Yeah. So I think like preparing as much as possible for every scenario that can come up, it's just more education for them.
So, Mike, as we draw to a close, and it's unfortunate we have to end this because we could really talk for hours, quite honestly, on this. It's been really fascinating. I've learned a lot. Is there a few points that you want to just leave our audience that takeaway messages? Or a story, yeah.
Yeah, so just to give you a little point, and I'll give you a story, try to make it quick for you. So the point right now is you're hearing so much as a blanket statement say it's not the right time to buy, and I tend to disagree with that right now because it really comes down to the house and the move and the product. So because mortgage rates are high doesn't mean you shouldn't buy, because it's very temporary to refinance to a lower rate when the market changes. So if you got the house that you wanted with a temporary higher payment, 2 years from now, the inventory still might very, very low, but you missed out on the opportunity of the house you really wanted in the town you really wanted. So if what comes up is what you want, it's very temporary. I mean, I don't like to use the very like catchy date the rate, marry the house, but the rate is going to be temporary. You're marrying that house. That's where you want to be. If it's really where you see yourself, I think you still move on the right house, because we can use a different program to keep the payment low while you're in there, so it's not an outrageous interest rate. Okay. And as far as the story, one that's burned into my brain, I will never forget this. It's probably the most rewarding I've had in 15 years. It was a guy I had met through my realtor, and my initial contact with him was he was very reluctant. He was very pessimistic about his situation, his details, his finances. And as is normal, it's never as bad as you think in your head, and you've manifested this dark cloud over your situation. Because when you have time to think about it for that long, weeks, months, years, it seems hopeless, but you might be ready to buy and not rent. So he had done that for a decade or more. And the realtor came to me and she said, just have a conversation with him. He doesn't seem very positive, but couldn't be a nicer guy. Like, genuine, always helps people out. I've known him for this many years, and like, he would give the shirt off his back for you. And I was like, absolutely, let's meet. So we met in person. We were supposed to talk for like a half an hour in one of the branches. We talked for 2 hours. We got to the bottom of it. His situation was not bad at all. And he had just been told too many things that were wrong, not by the realtor. It was just people around him, people he had dealt with financially, people that owned businesses but weren't in real estate, just had random facts to say about him. Not about him, but about the market. So when we went over it, I gave him the pre-approval letter. I'm like, go out there and find your home. And it took him like 2 months. He's the guy who always helps everybody out in his family, like the guy that never says no to like, I got to help you out. All right, here's a loan. I showed up to the closing, and we had talked weekly, and he was always very thankful. And it was always like, Mike, thank you for taking the time to answer my call, like super polite. And it came down to the closing, and I was sitting there, and usually like, I'm really just a decoration at closing. Like I don't serve any purpose. The attorney and him are talking the whole time. I bought him a bottle of champagne, and we were always like, we got to celebrate. We got to go to the house. I want to check it out afterwards. So like, and he was like very serious and like in the zone while he was signing. And then like, it just like kind of hit him, and he like sat back because he like signed the final document. So I like pushed the champagne over to him, and he just like broke down in tears. And it was like, I like got up and I like gave him a hug, and I was like, he's like, I'm not the person, I never thought this would be realistic for me ever. I'm not the person that like could ever think I could buy a home. And I was like, that's such a bad way to look at this. Like so many programs out there for you, but he had been so good for everybody else that nobody took the time to really show him that like, hey, you deserve this. And like, he broke down, and then after it was all done, he just had the biggest smile, and he was like, I own a house. And I was like,
That's awesome.
Yeah, man. And I'll never forget that moment. And it was like chills in my spine.
That's
I was
great
like, this
story.
is cool. So it reminds you, for every client that's very standoffish or wants to talk to every bank, there's clients like that really appreciate the time that you take out of your day. And that's what keeps us going, because we're constantly out there. We're trying to, whether it be educate people or gain business or whatever, you kind of get caught up in the whole hustle and bustle of it. And when you have a client like that, you're just like, I need to share that story, and for everybody out there, really.
That's a great story.
So now if people want to contact Mike Taveira, how do they do that?
Absolutely. I mean, on our website, you can go to baycoastbank.com. You go to mortgage lending. My website's there. I'm sure we can put it up on the podcast.
Sure.
I use my cell phone for people text me and they're like, hey, saw you here, got referred here. So I honestly provide my cell phone, 774-319-2099. And I'll put that up on the podcast as well. But call me directly, text me. There's nothing, even if it's you're not your name, you just have questions. I like to help people out and just at least give you a little bit of hope, because right now there's just so much incentive as first-time home buyer or any buyer to get what they want.
So, Mike, thank you so much. This has been a great conversation. I learned a lot, and I'm sure our audience has too. And as always, we're very appreciative to Baycoast Bank. Baycoast Bank is right for all your financial needs. Visit baycoast.bank or call 508-678-7641. And as always, you can support the 27th Degree with Chris and Nancy by subscribing to us on YouTube or your favorite podcast platform, and by following us on Facebook and Instagram. Also, please remember to leave a review. 5-star reviews are always greatly appreciated.
Absolutely.
And I want to also thank, of course, Ron Gamache for the intro music, and the PC Institute for producing our show. They do such a great job. If you are interested in becoming a sponsor, contact us at 774-319-4230. Thanks again.
Thank you for having me.
All right.